Hello and welcome.
Good
I guess,
morning.
good morning. I guess I have to do the mark. I'm being marked for 15 minutes until he gets in.
Well, then you have to say, good
That's right.
morning.
Good morning, everybody. Welcome to Option Pit
Right.
on the Tradier Hub. Welcome to our show with Lisa, the queen of the candlesticks. Me, Andrew Giovinazzi. What am I? I'm the vicar of all, and Mark is, of course, your only option. And we are here on PCE Friday after
Yes.
a surprising week, I would say, Leisha. So I guess the number here, I'm just looking at it now on the screen. It came out 0.1. It came out what I would say is a little light. Qs are responding. Do you want to talk a little bit about futures and how they're responding? But overall, I would say, less inflation is probably good, and the SPY is resuming its march up. And we'll talk a little bit too about a little curious artifact that's going on with the VIX and volatility. But for right now, Alicia, what are you seeing kind of in the futures here? At
Let me
least
show you
early in the
my
morning.
pitchforks here. It looks like it looks like they didn't really have a reaction. Am I wrong?
It's
Looks
not
like we're
much. I
still
mean,
down about 10, right? On
so a
SPX.
light reaction, and I have to swear, like when you see these light reactions early in the morning like this, I think that MU earnings yesterday, I was trying to think, MU came out with decent earnings yesterday. It got
Yes,
everybody really excited
they did.
into a new level. I mean, not new for the year, but it was kind of in a bit of a slide. All the semiconductors were kind of sliding away. I don't think any of them are near all-time highs, maybe except for AVGO or is close. But it feels like, and this is one of our topics a little later, but it does feel like the semis can, like, if something is going to get the market excited again, it
It
would
has to
come
be
from
that.
that sector. And I think MU has held up really well even after the earnings too. Again, I'm
Yeah,
pulling
it
up
made
the
it
slide over
double
here.
bottom there. And nice rally right back into an older pitchfork. But yeah, as long as it holds this area, once you get a big gap like that, you wait 2 days or so, and as long as it holds and maintains that area, generally it's going to continue in the same direction as the gap.
Yeah, and that's what I would think. So I mean, it traded at 2024 lows, up to 3 weeks ago, 2 weeks ago?
Oh yeah,
And
September
although
12th.
that isn't 1-year lows, I think 1-year lows were in the 60s. So the stock is still up, 80%
Oh
from
yeah.
the lows of the last year.
A year ago it was down here at $64.
Yeah. So when you look at semis in general, I mean, okay, pull up Broadcom AVGO just for kicks to see how the market has revalued all of these.
Yeah.
At least for right now, I would say all the semis have doubled in a year, and that's going on the promise of limitless AI demand. And I thought there was an interesting story this week about Microsoft wanting to restart 3 Mile Island.
That is interesting.
And so Microsoft said, okay, we need a lot of energy to power these AI centers.
Right.
And Microsoft looked around and talked to Constellation Energy. I think the symbol there is CEG. I don't mean to skip around on all your charts, but
That's okay.
And then look at what happened. Now, this is not a chip stock. It's not a biotech company. It's not Bitcoin. It is constellation energy. So the the potential of nuclear power
Clean
feeding,
electricity.
yeah, like all of a sudden now you're seeing like we could need 10 times, right? Or 5 times the electricity demand that we have right now just to power AI, I guess thinking for us. So all of our brains, if you put them
Just
together,
what we need.
has some sort of energy. I don't know what that number is, but it's probably pretty high. And now I guess we need we're going to need 5 times the electricity, 10 times maybe the electricity um, to power AI going forward. Now, what that means is chips, you need the real estate, you need nuclear energy to do it. I don't know how, like, what are you going to do? Cut down every forest to build a solar farm? I don't know if there's enough. You need, more dependable power. Nuclear is pretty dependable, except for 3 Mile Island. Nobody, like, the blight of that, I don't think has gone away. But the fact that, like, Microsoft asked, and also all the power that Constellation Energy is restarting for this, or getting the, I guess they're not restarting the bad reactor, they're restarting a dormant one or whatever. I don't know how that's all done, but it's just for Microsoft.
Just for them?
One company. So I thought that was Frank Gregory, who I work with at Capital Gains at Option Pit. This was one of his, stories actually a couple of weeks ago. Before on, what the demand, a lot of the power companies that still run nuclear power plants. And I think that's why the utilities, what's the ETF for the utilities? Is it XLU?
XLU, yes.
Take a look at that this year.
Wow. Look at that.
Now you think of XLU with the dividend payout that comes with it. And if, the Fed is aiming, we haven't even gotten to the Fed yet. But if they're pointing toward lower rates, all of a sudden XLU becomes a very investable thing. So it's clearly it's a one-way moonshot right now. Now look at how it is following that bottom about that for people, because it's actually kind of scary.
It's pretty amazing, isn't it?
Yep.
Just marching forward.
Yeah. So is it
higher?
like on the bottom of your pitchfork line? What do you call that lower line again?
This red line?
No, the one where like it's literally the chart of XLU is going right up that lower band, literally following it like it's walking up a mountain.
It sure is.
It is.
You know what other
chart does not want to go below it.
You know what other chart is doing that? Is gold, or was doing it until gold did the same thing.
Now it's just moving parabolically higher.
Yes. Yeah.
So it almost feels like too this week that you felt there was some kind of sea change in the market in general, between like big money sort of saying, you know what, if the Fed is going to lower and the government's not going to cut spending, we're going to move into, first off, that's going to be a high demand situation, right? Because government's not cutting spend, they're continuing deficit spending. Likely reignites inflation. That seems to be the bet. A lot of metal stocks have flown, like FCX, Rio,
Yes.
Billiton, all of them.
Yeah.
Just straight up. Like, look at those charts. It's almost too crazy to look at.
Yeah. This was September 10th, 39.40. Yesterday, 52.51. My resistance stopped it.
And
yeah.
it's amazing how it's continuing to move higher. So you look at this and you say, wow, someone somewhere is putting big bets into very narrow parts of the market. I mean, it's not like these are small parts of the market. Look at Rio. That's another one that just went.
Yeah,
That was another one of Frank's stocks.
nice.
Again, we were looking at $60, like surprising move higher. So, anyway, so this creates a pretty, and really when you talk about either presidential candidate right now, I feel like everything that's coming out of their mouth is kind of like butterflies and, and rainbows.
Unicorns?
There's I don't think anyone's talking about the deficit, not that I've heard, which,
Well, they
if
can't get
anybody reads
elected.
their Milton Friedman knows it contributes to inflation, but you don't hear anything on it. All you hear is rainbows for as far as the eye can see. Everything will be fantastic. And the market's reacting by piling into every commodity every commodity stock known to man.
Yes. They can't get elected, Andrew, if they're not, I think they can't get elected without giving people more, right? More handouts, more.
And I think that's a trend of the last, 12 years, last 20 years, really.
Probably,
it's like,
yeah.
At some point we had some fiscal responsibility, like in the late 90s, we had some sort of harmonic convergence. And then since then, basically after Clinton and Gingrich left, it was all
spending spree.
Yeah, pretty much. So anyway, where does that go from a market point of view? I mean, commodities, AI related stocks, utilities, chips. So there's still, let's call it there is plenty to go around. Now, that's the good side of the ledger. I wanted to talk a little bit about NVIDIA because it's NVIDIA, Apple because it's Apple, and then SMCI that kind of started to derail the chip rally yesterday.
Yes, it did.
So what are the charts kind of looking for you there?
NVIDIA stopped right at my median line there yesterday and did a big reversal. You may get a little pullback, 120.82, and then down here, 114.5. I would not go long NVIDIA until it closes over 126.64.
Okay.
Then it would go up here 130.5. So maybe a little pullback's in order here.
And our next one is Apple, because again, how does the market move without two of the biggest market caps, right?
Yeah.
They're buying everything else. Like, these are fine.
Yep.
They're multi-trillion-dollar companies, but the market is like, okay, what else is out there that looks cheap and relatively cheap and growing instead of paying full pop? How about Apple all of a sudden acting really odd with the market at all-time highs?
Same idea, kind of made a double top here, right around my median line. Now it's consolidating between these resistance and support levels, may just trade in that band. Kind of stuck between 223.5 and 231. Buy it here, sell it here. Buy it there, sell it there, and make a lot of money.
You know what? I just heard a little birdie that the only option is in the room. Should we welcome it? Like, because I think he could opine a little bit as we come in to because the next stock I want to talk about was SMCI, but if he's here, we could probably pipe him in now. I don't hear him. Oh, there it is. There it is.
Hey, guys.
The only option.
Good morning.
Good morning. It's Mark Sebastian.
I was trying to host, Mark. It's rough.
Your only option. Excellent hosting job, Andrew. Thank you. BigBlondeHair.com is out of town, so I am wrangling children this morning. So doing my best. But happy Friday, everybody. So we're looking at SMCI. And boy, this one, it just gets worse and worse.
Now, has there actually been news? All I know is they haven't filed a 10K or something like that.
They're
So they're
under they got I believe they got a something for the federal government yesterday, and that's why they were toast. This morning, I would imagine we're getting near a bottom. This morning, basically flat. This might be a spot where you actually think about, if there was ever a level where you would say, hey, maybe this is worth a shot, we're getting kind of close. Got completely overbought. But this is not one of those. Normally, when we talk about stock splits, because this has a 10-for-1 split coming. Normally, when we talk about stock splits, we think like, it's going to sell off after. I think this one has done a pretty reasonable job of selling off into the stock split. That's just my take. I don't know what you guys think.
Well, you can see it with your own eyes.
Yeah.
Yeah, the company gets the Wells letter. They're not really. I think the biggest problem is there haven't been exactly forthright with explaining the problem. Like normally, you have a large company, a lot of lawyers, a lot of accountants, and it's like it's a ghost town of news from them, which I don't think is. Every day that goes by does not feel like a positive thing for the company. But
yeah,
I don't want to say the Enron word, but
I don't think this is an Enron case. Like, this was a legitimate company that kind of got caught up in the whole AI boom. Where was this before it like completely took off? What was that, Alicia? What was that like price level right before that big pop?
237.60. Right here is 327.
327. All right. So here's what I'd say. It gets down to like $300. It's probably worth taking a stab at. That's probably the level. So with that one, Andrew, we've been talking about option fingerprints a lot and how they relate to specific stocks.
Yep.
But I kind of want to talk about how they can relate to indexes as well.
Oh, okay.
Options have kind of taken over many of the major indexes. And I think a lot of people were surprised by the turnaround yesterday in the overall market.
Mm-hmm.
And I want to, when people doubt the power of optionality in today's market, I want to kind of walk people through how important options are, in that literally a giant option trade from JP Morgan turned around the whole market yesterday, and then SMCI helped. So I'm sharing my screen,
Okay.
Max. I want to point out these are the September quarterly 5750 calls. And I want to point out the open interest is 49,062. That is, and they're currently about a 56 delta. Prior to yesterday's open, they were about a 40 delta. At their peak, they were about a 60 delta. And JP Morgan every quarter runs a collar strategy. A collar strategy is when you own a put, or in the case of JP Morgan, a put spread, and you finance that put spread by selling a call, and then you're long the market. And so basically by collaring, you're saying, I want some upside, but I'm willing to give up some because I don't want any downside. And so JP Morgan, and this is really rare, most of the time, where their collar is doesn't really matter. But if their collar strike is really close to where we're trading, as it approaches expiration, it becomes a behemoth. And where they're centered is the 5750 strike. So check this out. I mean, this is the September 30th options in SPX, and it sticks out like a sore thumb. You can like just see where they're traded, where they traded. They're short 49,000. JP Morgan is short 44,000 of the 5750 calls. And now it's a little different kind of a footprint, but I think the point is the effect that options can have on the overall marketplace. What this is going to do, because dealers own these calls. This is a little different than Andrew's option footprints, because normally it's the banks that are buying those calls and the dealers are short them. In this case, dealers, and when I say dealers, I mean market makers. Market makers are long 44,000 of the 5750 calls. So when we get above 5750, they're selling S&P futures. When we're below 5750, they're buying S&P futures. And so what is that going to do to the overall market? Well, I'm going to do a little quick math. These are 50 delta calls. They have 44,000 of them. That is 2.2 million deltas of the S&P 500, which is currently, and if you throw in that strike, they got just a cool 12 billion notional floating around there.
How about the gamma?
Yeah. And that's not even getting into the gamma. So this strike alone is $12 billion in notional S&P that they're playing around with. And so my point is that this strike, if you want to know why we flipped around yesterday, we started to turn around at the open because market makers were hedging off their downside positions, or they were hedging off this position. We had blown through 5750. They were long a bunch of exposure from their gamma, as Alicia said. So they have to sell futures. All those futures, they had to sell about 20,000 futures, if you do the math. 20,000 futures on the open is going to make the market drop. So the market drops, then the SMCI news hits, and the market ends up down, going from up 45 to up 23 on the close. Here we are today. Currently, S&P futures look like they're marginally up. Yeah, we're about 8. Yeah, we're literally sitting on 5750. And this thing may act like a magnet for the next 2 days. And so I think traders have to beware. My overall point being is that options are now the dog. You know, those option fingerprints are the dog, and the overall stock is now the tail. Even the S&P 500, the largest index in the world, is the tail. It's no longer the dog. Everything revolves around the option marketplace and bonds. Stocks are really just kind of a way of expressing what derivative markets and the bond market are telling us. Stop me if you think I'm telling tales outside of school.
I do not think you're telling tales out of school, to be quite honest. That is a good synopsis.
All right, thank you. All right, so speaking of fingerprints, let's talk about some election surefire winners. There are going to be winners and losers depending on who wins the election. And you can stop sharing my screen. There are going to be election winners and losers depending on who wins. But there are some industries that are almost certain to win whether a Republican wins the presidency or a Democrat wins the presidency. And I wanted to ask Andrew whether he saw any fingerprints in some of the names that I believe are 100% going to win in this next election.
Do we want to talk about what fingerprints are?
Oh, I think we should talk about what fingerprints are. So, Andrew,
So I was going to
what is
give
an
a
option
quick,
fingerprint?
I was going to give a quick sample.
Yeah. What's your sample?
So if you just switch to my screen, so this is just, so option fingerprints basically is how do stocks rally? How do stocks make? So this is Palantir. So how does Palantir go from $7 to $38 in a year? Okay. It goes up, more buyers than sellers. So, but somewhere along the line, institutions that have dough have to get behind the stock. Now, a lot of people look at dark pools and stuff like that, but since we're option traders, and being a floor trader for a long time, it's like, okay. And watching stocks basically go from 40 to 5 and back up to 40 again after watching that for a year, like what's a way you can, kind of tell to see if there's some accumulation. So here's just Palantir on the rally, basically, over the last year. Now here, I just want to do a quick example where the fingerprint we're calling here is how many options are in the money at the time. So on May 5th, this is about the bottom of the stock. This is, again, giving you an idea what's going on. Remember, the stock had already come from the 30s back down. So there's a lot of open interest above, a lot of bag holding above where they're still. So if you think about it like this, if you sold those calls and the stock is 7, you'd be buying them back if you could. But if you're long those calls and you're holding the bag, they're not closing them. So right now the stock at $7, you see about 135 open that are in the money. So it's not very much. Like all of a sudden, nobody cares about the stock anymore because it's going down. Then all of a sudden, right now you have, again, we're a year later, clearly institutions are now starting to find the name. It's gone from 7 to 21. It's 3X. And now what you're seeing is all the open interest that's in the money. Remember, when I started out, long-term options were asked for by institutions so they could buy a 1-year call and hold it, basically, or a 2-year call and hold it. They didn't want to have to keep rolling. So a lot of the long side playing in this space in leaps are institutions. So you can see here now, basically what we call our fingerprint in the money size. Again, they are not closing these options. That's the thing that you want to think about. They're long them and they want to stay long. So you basically have a 700 times jump with a 3X move in the stock. So they're not closing, right? Either they'll take delivery at 2025. Again, they had about half a year to go, 7 months. And then by, now that we're trading close to the highs, another 4 months, now the in the money volume, you go all the way down the strip, is exploded. It's enormous. So funds that own these calls, eventually those take the stock or they'll roll in a year or something like that. But accumulation of a stock or accumulation of in-the-money options, because folks look at dark pool, they look at all kinds of things to look for volume. But actually, kind of simply, you can just look and see, is there long-term accumulation in leaps? Mostly, again, from my experience, institutions buy that long-term stuff. They kind of tend to sell the short-term stuff for the income play, but they're going to buy those long-term. So fingerprint this way is just describing that phenomenon. So that's kind of a look at Palantir. Like, how does a stock go from 7 to $37? Many institutions with dough start to become interested in the name. And part of that, they leave their fingerprint on the long-term options. So that's
kind of basically saying Palantir is a stainless steel refrigerator, and banks are college kids that don't wash their hands after they pull something out and leave fingerprints all over the stainless steel, and it's a problem.
You could say So my trading vehicle today is a stainless steel refrigerator.
There you go.
Unlike the vehicles of the past. So, and anyway, so that's kind of where.
Andrew, do you remember when leaps were introduced?
I do.
We had guys in our pit that were so afraid of them, but yet all it really was, you know, you change your implied vol a little bit. You had, you know, you're guessing literally at the interest rate, but we were allowed to have pretty wide markets, and they were money makers initially because they were brand new. They gave us some leeway. They were fantastic when they first started. And we had guys in our pit that were so afraid to trade them. It's like, oh, well, that's okay. We'll take them.
And the things you see now, like you see markets that are 20 cents wide. You know, we never had that problem, right? We were like $1.
I got dressed down for doing 100-lot risk reversal in a leap, and not like the far leap. Like it had 11 months to expire in UPS, and I got dressed down. I traded it on I bought the put. I sold the put on the offer and bought the call on the bid. And the spreads were 50 cents wide. I got dressed down for doing 100 of them. It was $5,000 an edge, and I got absolutely screamed at. It's just funny nowadays. Like you think about, like the same firm would do 1,000 of those if they could.
Right. Absolutely.
You know.
So this is the leap story is a 30-year-old story, maybe a little longer, 20, 35-year-old
great story.
Yeah.
But this is again for, you know, in open interest. Hey, if you have Thinkorswim or you have Tradier, right? You have all these different platforms with open interest. They give you this information. So, you know, it's just, is it growing? So I have some ways to look back at history a little bit. So once kind of stocks pop into my radar, a stock that has just a little bit of a jump in open interest lately would be MP, which is a rare earth, a rare earth name, where like all of a sudden over the last 3-4 months, while the stock has been languishing, there's been a pickup in long term. Now today the stock's kind of flying. We have a position on it,
and it's had a nice little breakout here. It really was in the toilet, just kind of hanging around 14 forever. Nice little breakout. I remember looking at this one from like kind of short dated flow, but now you can
share Mark's screen now on it.
Nice uptick in option volatility. So all right, I have to bounce here in a second, but on these election surefire winners, I wanted to talk about what are some of the winners that you guys think, what are some of the names that you think can't lose, and are there any option fingerprints in those names? So I was looking at 3 areas where I think there are we can't lose. All right. One is nuclear.
Yep.
All right. 2 is not chips in directly, but chip manufacturing. Those that make chips because of the CHIPS Act that they've got. I think if you're involved in producing chips in the United States or along those lines, chips in general, I think they're going to be a surefire winner. And then infrastructure was the other one. I've heard both candidates basically say it's time to invest in America, fix the roads, fix the,
our airports are horrible.
The air, right? I mean, is LaGuardia might be the single worst for a for our nation's largest city. LaGuardia is an embarrassment.
Yes.
All right, it is an embarrassment. JFK isn't that great either. No offense. The fact that New York should be embarrassed that Newark, New Jersey is their nicest airport. So those are kind of the 3 areas that I think there's going to be some winners and losers in, and I'll leave you with this, Andrew. Are you seeing any option fingerprints in any of those names? And Is there any, Alicia, are you seeing any charts that you think there's some upside there?
Fingerprint wise, there's a little bit. So CCJ is kind of the, you can share my screen here, just kind of the poster boy. I've seen a little pickup in this, and this is like the classic.
Now, by the way, bye everybody. I gotta go take a kid to school.
All right.
I leave you in the great hands of Andrew T and Alicia J.
So here is a CCJ, a pickup. This is like the classic where the stock makes a high of the year, then makes a 1-year low, and from there starts to like kind of rally out of it. And that's generally where you start to see, okay, little institutional pickups. So CCJ has been one. There's also been a lot of short-term flow. So if you wanted to do, Alicia, kind of a little pitchfork here, because now I think the stock is starting to break out. It did come off a little bit yesterday, but I expect this one to lift a little bit more. So this would be a good example.
I'll show you my pitchfork. It's actually traded to the top of my pitchfork. My downtrending pitchfork, it's traded to the top of it after making a double bottom. Although it's now back into this upward sloping pitchfork that goes way back here.
Right.
To December of 22. So I would say once it clears yesterday's high, you're going to head towards 52. And if you're eventually going to make it up to the top of this pitchfork, 60, 62. So it has some room to run for sure. These previous highs were 56.
So this is a name, another name I have. So we talked about it was MP, which this one was showing a growth in, of course, I have all my slides. I took pictures of them and they're on my other computer, but this was showing a pretty large pickup in the Jan 2026 now option. So order flow has moved from 2025 or, a little shorter term. And this is doesn't have a huge float either. So there's been a pickup in volume in this one. So this is a name that we follow in Cap Gains. We're currently long it. We own some calls, and they're doing well. But this was a $60 stock. I mean, again, the rare earth thing goes between sort of feast or famine. And as we move into nuclear energy and all of the materials associated with AI, so no matter who wins the election, these companies should benefit, just because from a scarcity point of view, trying to pull this stuff out of the ground, especially in the US. And that's why this stock basically goes from kind of feast to famine. So it looks like right now it is more on the feast side. There's volume. The earnings are pretty decent, but again, that moves up and down with commodity prices. But like with all commodity stocks, when do you buy them? You buy them when they don't cost very much, and then you wait to see what a pickup in demand looks like. So for this particular one, this was the one that I thought was a really good example, and a good example of how fast the market can change its mind on any stock. So like, as you know too, Alicia, market is kind of like fashion. So part of Option Shopper, of course, is what's fashionable now, what are they coming for? And right now, anyway, a stock like MP is a classic example of,
this is a really nice
beast.
May I? That's a really nice chart, Andrew. It's closed above the median line, and it looks like it wants to trade up here. 19 3/4. This up here is 19.29. Yeah, right. This is a very nice bullish chart. You also have a nice stop loss here on the median line, 16.57. I'm going to look at the calls in here today. That's okay. I'm gonna steal
Now,
an
it wouldn't
option
bother me
shop
if
for
it
trade.
followed. So, but I think, again, opportunity wise, right? There's a lot of stocks that have led the market, and you can see that they've sort of plateaued. And part of, like part of the flash 10 that we're doing at Option Pit is a lot of stocks can move. They had really, like, the market loved them, they hate them, then they come through another phase. And like MP again is example of one of them, just in a material space, but there's tons. And with most of the tech plateauing somewhat, and with SPX rising to all-time highs, something else, right? Money is moving into some of these names. So that's part of the whole game. So I go live today at I think it's 1 o'clock. So I'll be walking through with my students on some of the names that look very, very good. And I guess with that, the last thing, we didn't mention VIX at all. So with 1 minute to go, it is not moving. We have rallied. We'd spent a whole week. VIX is going down, but the volatility futures are not moving at all. And I believe we're stuck in an election cycle. And because of the way the VIX futures work, they're sampling a November cycle for the election. When you do the swap, or what I basically try to simplify it by letting people know about forward vol, but you're long the back, short the front, and it is causing the VIX futures to continue to rise until VIX starts to pick up more of the election volatility. So unless something weird happens, you're going to see kind of a non-response from VIX for a while. So if we just keep batting back and forth like this, you would think VIX would be 13 with the way the market has been operating at all-time highs. But because we're moving toward that election, and I think the market looks good, but they're very uncertain around the election and what's going to happen after that. And that's in the volatility in the S&P 500. So I will leave that there. It is still there. So if you're looking at the VIX puts in October, like, why are they so cheap? That's the reason. Because basically I've never seen them this cheap with this much time to go in 10 or 11 years of looking at VIX options. This is by far the cheapest they've ever been. But I think
That's amazing.
And there's a reason.
That's amazing.
Yes. So with that, I guess that ends our show. So for the Duchess of Doge, Queen of the Candles, Alicia J. Leslie, and me, the Vicar of Vol, and for your only option, Mark Sebastian, this was the Option Pit crew wishing you a excellent Friday and have a nice weekend.
I was trying to find your link to your class today, to join your class today.
Oh, that would have been great if I had it.
Maybe we can drop it to Lewis.
Yeah, we'll drop it to Lewis to try to post.
Thanks, everyone.
Right. Thanks, everybody. Have a good day.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.